Welcome to Adda 24/7. We are in the champion series for RBWM. Here we are covering all the subjects of JAIB. In this we are covering today we are covering RBWM. In RBWM also I am covering all the theory as well as the objective questions. Okay. So let's start with securitization. Now before going ahead, everyone kindly like the channel, share the channel, subscribe to the channel, click on the bell icon. Do it fast. Okay, let's move on. Firstly, understand the concept of securitization. What is securitization? See, in a broad level I have given it. Group of underlying assets securitized into an asset-backed security purchased by investor. Now what are we doing in this? Kindly understand. This is a loan given by some bank. Any bank it can be. Commercial bank means nationalized bank, private bank, any bank. This bank sells this loan to an SPV, special purpose vehicle. This SPV will, what will it do? It will further sell this to the investors. So net what is happening? Bank loans are funded by the investors. Okay, so that is basically securitization. The loans, now which are these loans? Kindly note, group of underlying assets. Now assets, what do you mean by assets? These loans are generally asset-backed securities. Asset-backed means it can be home loan, it can be car loan, it can be commercial loan where it is securitized, where it is collateral is there. So mainly it is always, remember, asset-backed, because nobody will purchase anything which does not have an asset. Asset-backed. Okay. So generally these are asset-backed loans. Got it? Now what do you mean by this? So this is a bank. Let's say this is SBI. Okay, I'll show you in the next image only. See this. From here the picture will be clear. See here, there are three transactions in this. Three. Number one transaction is between the borrower and the bank. Borrower and the bank. This bank is called as originator. So this bank, there are three names to this. Bank, originator. Now it can be a bank also. Nowadays even the NBFCs give the same, right? Originator. Okay, and this is known as a borrower. Borrower. Okay, so first transaction is between the bank and the borrower. What is this transaction? This transaction is simple. Bank gives a loan to this borrower and borrower will give the EMIs. So receivable means EMI. Borrower will give the EMI. Okay, so these EMIs are the right of this bank, originator. So what will this bank do over here? With these EMIs, it is having, here what has happened now. This bank has given a loan of, let's say, 1000 crores to various borrowers. Now not to a single borrower, 1000 CR. So what does it mean? 1000 CR of this bank is locked now. It is locked. See this, locked, because it's gone now, gone to the customer. Right? So this bank wants to liquidate this. The whole game of securitization of liquidity. So what does this bank wants? This bank wants to liquidate this now. How will it liquidate? So there comes the transaction number 2. This bank or originator will contact an SPV. Now what is SPV? SPV is basically a special purpose vehicle, a separate entity floated by generally the banks only. These are generally floated by the banks only. So SPVs are floated by the banks or their group companies. Like for example, SBI. SBI is a bank and they have their own SPV. That's called as SBI Capital. So this is their own SPV. Now it can be separate also. There is also, for example, Kotak AMC. So So that SPV is also there. SPV can be of the bank also, or it can be of a separate entity also. It can be any. It's basically a separate company. Got it? So bank will, what will it do? It will sell the rights. Now look at this. Sell the receivables means rights. It will not sell the loans. It will sell the rights. Rights under this loan. So these are sold to this SPV. This is transaction number 2. The bank sells the rights under the loan to the SPV. So that is transaction number 2. Okay. Now if this is transaction number 2, what will this SPV do now? This SPV will further do transaction number 3. This SPV will further sell the securities, okay, receivables, to the investor. And investor will give cash to them, right now cash. So got it? There are 3 transactions. One is between the originator or the bank and the borrower. Second is originator or the bank and the SPV. And third one is SPV to the investor. So there are basically 3 transactions. Okay. Now few points to be noted over here in these transactions. What is the guarantee now? Suppose if, let's say, this investor wants to invest, take this investor wants to invest in this. How will he know whether this is right or not wrong? Means whether this SPV is selling them right or wrong. How will he know, this investor? For that we have the credit rating agencies. So credit rating agencies will rate the loans. These all loans they'll rate it. What do you mean by rating? They'll give you the risk factor in this. Risk factor in the sense, they'll give you as such like what is the amount of loan it can have, means amount of loan which is at risk over here, or they can give you what is the amount of collateral the loans are having, or they can give you what is the amount of let's say not only collateral, what is the amount of, let's say, security backing. Okay. So SPV means basically this SPV will be rated by the credit rating agencies. Rated. Okay. So rating is done by these credit rating agencies. Now which are these credit rating agencies? It can be CRISIL, it can be ICRA. Okay, it can be CRISIL, ICRA, or it can be anything. Fitch, many are there. So they will give the ratings to this SPV. Not only SPV, they will give the ratings to these loans, because after all you have to invest in those loans, specific loans. Okay. So this is a rating agency. Now what will this SPV do? This SPV will get the liquidity support. What is this liquidity support? Liquidity support means the support given by some sponsor. Generally there is a sponsor over here. This sponsor will give the liquidity support to the SPV. What do you mean by liquidity support? It means for buying this, from where will the money come to SPV? Suppose if this SPV wants to buy this loan of the bank, from where will the money come? Isn't it? The money will come from where will this money come? The money will come from this sponsor. Okay, this sponsor gives the money. So the point over here is, kindly note, there are 2 parties who will always support this SPV. One is credit rating agency and second is liquidity support. Okay. Liquidity support is of utmost importance. If you don't have liquidity support, you can't buy anything, because after all it's business. In business you need money, isn't it? So net getting back to this, what do you mean by this? What are the number of transactions? Number one is EMI, means between the bank and the borrower. Kindly note this, between the bank and the borrower. Second transaction is between bank and the SPV, and third transaction is between SPV and the investor. Okay. This bank will give this loan to the borrower. Borrower will give the receivables, EMI. These EMIs will be further sold to this SPV. This SPV will further sell these EMIs in form of bonds. It will convert it to bonds and sell it to investors. In this way, the whole transaction moves on. Got it? So coming back, what is securitization then? The pooling of assets to repackage them into interest-bearing securities. See this, pooling of assets to repackage them. Repackage means what? Who does the repackaging? See, this is done by this SPV. SPV will cover these receivables or EMIs, convert these EMIs into securities. So basically, what is the logic? Your EMI gets converted, EMI, future EMI, in fact, EMI, okay, future EMI, it gets converted into securities. What are securities? These are bonds. So your future EMIs get converted into bonds. Got it? Pooling of assets to repackage them into interest-bearing securities. What are these interest-bearing securities? These are basically debentures. Look at this. This interest-bearing securities means debenture. Generally, these are debentures in form of debenture and bonds are roughly the same. Bonds are issued by government company and debentures are issued by private companies. So pooling of assets to repackage them. Repackage, very important. Repackage. Okay, repackage means this loan which is given by this bank to this borrower, the EMI of this loan is repackaged into securities, converted into securities. Okay, so securitization means what? Pooling of assets to repackage them into interest-bearing securities. Who will buy these securities? Comment section. Who will buy these securities? These securities are bought by the securities. These are purchased by investors. Who will sell this? Who will sell these securities? So see this, selling is done by SPV. Selling is done by SPV. Who will buy this? Buying is done by the investor. Investor. Okay. Then what is bank called as? Bank is called as the originator. Bank is called as originator. What are the advantages of securitization? Now there are two advantages. One is to the originator, second is to the investor. So what are the advantages? See this, the advantages to the originator are, originator means what? Bank. See this, the advantages to the bank are, it unblocks the capital. Unblock means what? Whatever capital has been gone into the loans or blocked, that is freed up. That's why we say liquidity support is given. So unblocks the capital. Suppose if I am SBI, I have given a loan, okay, to the borrower. So this loan, my money is actually blocked, right? So when my money is blocked, what will I do? I'll sell this to SPV. So SPV will give me this money. I'll sell it to SPV. SPV will give me the money. Okay? Or liquidity. SPV will give you the liquidity. So that's why it provides liquidity. Look at the second point. Unblocks capital means provides liquidity. Lower funding costs. These costs are very less. These costs are very less as compared to your normal funding costs, bank loans and everything. These are quite lesser. So lower funding cost. Risk management. Okay, risk is managed. Why? Because look at it, your loan is actually over here. Your loan is basically converted into bonds. So this way the bank also benefits. And this SPV's risk is also managed. How? Using this, the credit rating agencies will manage the risk. Overcoming profit uncertainty, whether I'll be in a profit or not, profit uncertainty. So overcoming this, okay, reduces need for financial leverage. What do you mean by leverage over here? Leverage. What is the leverage? What is the leverage? Leverage means taking loan on loans. Okay? Taking loan on loans. What do you mean by this loan on loans? Many of the investors have the habit of taking too many loans. Okay? So loan on loans. What do you mean by this? Leverage. Look at this. Suppose if I am having a house, okay, house of let's say 1 crore, 1 CR. I have taken the loan of let's say 80 lakhs loan. So what will I do? In leveraging, what will I do? I have already taken the loan of 80 lakhs. Now what will I try to do? I'll put this 80 lakhs in some other property. So I'll buy this property and again go to the bank and get a loan of this time 60 lakhs. So it will go on reducing. So this is known as leveraging. Through one asset only, I have created so many assets. From 60 lakhs again I'll buy a property. And again go to the bank and get 40 lakhs. Okay? So this is known as leveraging, using the only single money. See, how much have I invested? Only this much, single money. So using the single transaction, I prepare multiple transactions over here. This is the way CRR also works. CRR also works on the same concept of leveraging. So leveraging from government point of view is good, but leveraging from the customer point of view is very bad. You have to be very cautious while leveraging. Okay? So reduces need for leveraging. What is the profit to the investor? Look at this. Profit to the investor is quality investment. So the investor gets a rated company. Rated means, suppose if I am having the rating of AAA plus, it means I am safe. So quality of the investment will be better for the investor. Less credit risk. Why? Because I am having all the credit rating. I am already having the credit rating. So less credit risk. Better returns. Better returns means better than the bank. Generally it is compared with the bank. So better returns than the bank. Bank gives 6%, you will get 8%. Diversified portfolio, it means I can have the portfolio diversified in various bonds, asset-backed securities, various securitization bonds, securitization debentures. I can have this diversified portfolio. Benefits to small investor. Even the small investor can invest in it. Otherwise what happens? Earlier only big investors used to invest. Now it is for smaller investor also. So these are the advantages of securitization to the originator and to the investor. Now let's solve some questions. The process of issue of security received on the strength of the loans purchased to raise the funds by securitization companies or asset reconstruction companies is called as what? Very simple. Think over it, everyone. So is it called as securitization or factoring or forfeiting or takeout financing? So firstly you need to understand these terms. Okay? What are these terms? What is factoring? Factoring is basically purchasing of the receivables. Okay? So it is similar to invoice financing. Invoice Financing. This is a major term used in financing. Similar, huh? It's not same. There are basically many layers in this. There are 3-factor system, 2-factor system. Okay. In factoring, what do? They purchase. Suppose you are the exporter. Okay. You go to the bank. See this bank or any financial institution. It's not compulsory that it should be a bank. So you are the exporter. You go to the bank and tell them that see, I have done these exports, and this is the money which I will be receiving after 1 month. So for that time you give me the finance. So this is factoring. Similar to your pre-shipment financing. Forfeiting means what? Forfeiting is similar to factoring, but this is for the longer term. Long term. Factoring is generally up to 6 months. Generally. Forfeiting is for longer term. Okay, more than 1 year. This is for turnkey projects. Okay, turnkey. Turnkey means what? Dam construction. Dam construction. Okay, suppose if I have to construct a dam. So this dam construction requires a lot of years. 15 years, 20 years, depending on the position of the dam, land acquisition, everything. So forfeiting will include this dam construction or railways, setting up the railway network. So this is also important part and difficult one, longer term. So turnkey projects, mainly remember factoring is done for turnkey projects. Turnkey. Turnkey means long-term projects, turnkey projects. Okay. Now takeout financing. Takeout financing is also a financing part for long-term projects. Long-term. Again remember this, long-term. Okay, what is takeout financing? Takeout financing means, suppose if I am let's say bank, I want to give a finance for let's say dam construction. Now this dam construction, let's say it requires 15 years. So I can't finance as a bank for 15 years, right? Can I finance for 15 years? Banks are not allowed to finance for more than 10 years. So what will I do? I'll speak to let's say NABARD and tell NABARD that you finance for 7 years and remaining 7 years I'll take over the finance from you. So I'll take over the finance, means you finance for 7 years, after 7 years I'll take this finance from you, purchase this finance. So that is known as takeout financing. So what is the answer for this? But the answer for this is process of issue of receipts, security receipts on the strength of the loans purchased. So this is basically securitization. Just now we saw it now. This is step number 3, isn't it? Remember this? Step number 1 was between whom? Everyone. Step number 1 was between bank and the borrower. Bank and the borrower, right? This was the actual loan given. Step number 2 was between whom? Bank and the SPV. Okay. Step number 3 was between whom? SPV to the investor. So what does this mean? Say this. Security received on strength of the loans purchased to raise funds by securitization companies or ARCs. So this securitization company or ARC, SPV means securitization or ARC. Okay, asset reconstruction company. So it can be a securitization called as securitization company, or it can be called as ARC, asset reconstruction company. Okay. So got this point, everyone? Clear? Move on. Normally securitization company raises funds under the securitization by selling security receipts. So they raise it from whom? Dash. From dash by selling the security receipts. Do they raise it from the banks? Do they raise it from the financial institutions? Do they raise it from QIBs, qualified institutional buyers? Or do they raise it from mutual funds? So basically the question is, this securitization company means step number 3. This 3 step was between whom? SPV and the investor. So this step number 3, who will be the investor? Who will be the investor? This is the question. Will this be the bank, or will this be the financial institution, or will this be the QIB, qualified institutional buyer, or will it be the mutual funds? So who will be? Now the question over here is, kindly note, how will you note? Means you first need to have the difference between them. What is the financial institution? Financial institutions means any institution whose this institution company which is dealing in finances, means basically dealing in all mutual funds, shares, anything it can be. See, a financial institution can deal in loans also, it can deal in any shares also, it can deal in mutual funds also, anything related to finance. Qualified institutional buyers. Now who are these? This is very important. Just type in the comment section, who are qualified institutional buyers? Who are these? Just type in the comment section, everyone. These are basically large financial institutions, big ones, very big ones, okay, that have financial resources, means good resources, good money, huge money, like JP Morgan, Morgan Stanley, or in our country we have SBI Capital, okay, Tata Capital. These institutions have huge money, large financial institutions that have financial resources and expertise to invest in high value securities. High value, remember, high value securities. Isn't it high value? Whenever you are selling the loans, what is loans are? These securitization loans, what is the amount of these loans, do you know? The amount of these loans is normally to the range of 1000 CR. Minimum CR. Minimum it is, maximum it can go to any amount. So these are all high value investments. So who can do this? Can you do this? Suppose if I ask you to invest in 1000 crore some any issue, IPO, will you be able to invest? Because we don't have that much expertise. This expertise is available with large corporations because they have huge money. They can pay for the qualified CAs, qualified this analysts. So expertise to invest in high value securities. They are allowed to participate in securities offerings that are not available to retail investors. See, this QIB is whatever, wherever they invest, that is not available to retail investor. In IPO also, if you check this IPO is always open for 2-3 categories. Retail investors separate. There is a separate called investor called as QIB, qualified institutional buyer. These QIBs invest in anything. They can invest in your debt securities, IPOs, or any private loans given by anyone. They can invest in anything. Now how do these QIBs raise the capital? These QIBs help companies. So how do they help the companies? Help the companies to raise the capital by participating in large investments. Okay, so these are QIBs. So the question is, securitization company raises funds from whom? Is it from financial institutions, from QIBs, or mutual funds? Are mutual funds allowed to invest in securitization? Generally no. So the answer over here is QIB, qualified institutional buyer. Okay, that's why I explained this term more, because QIB is an important part of securitization. Next one. The process of securitization is normally carried by a company or a trust or some other organization which is called as. So who does this securitization job? Asset reconstruction company, special purpose vehicle, joint stock company, or reconstruction company. Who does this job of securitization? So again go back to the three steps. Step number one was from whom? Originator or bank. Originator, right? That is also called as bank. So originator to borrower. This is a normal loan transaction, right? So I'll write this bank over here, bank. So this bank will further sell it. Step number two, it will deal with bank will deal with whom? SPV. And third step, SPV will deal with whom? Investor. So remember, there are three steps always in any securitization. So the process of securitization is carried by a company or a trust or some other organization which is called as ARC, SPV, joint stock or reconstruction company. What is a joint stock company? Joint stock is simply a limited company. Limited. Okay? It's simply a limited company. This is the US term given. Okay? US guys have this joint stock and all these names given. Okay? Got it? So this is generally mentioned in US. We say it private limited. Okay? So what is the answer over here? The answer is SPV, Special Purpose Vehicle. Now this SPV is also called as ARC. Kindly note. This SPV is also called as Securitization Company or ARC. But real name is SPV over here, Special Purpose Vehicle. Okay, so this is known as Special Purpose Vehicle. Got it? In securitization process, the loan assets are converted into marketable paper securities. These paper securities are called as what? Debentures, pass-through certificates, bonds or shares. These are called as what? Yes. Think of it. Is it bonds or debentures? Yeah. Think of it. But what is pass-through certificate? What is pass-through certificate? Yeah. See this, I'll explain you. What is pass-through? See, the answer is pass-through. What do you mean by pass-through? See this, pass-through means what? Kindly remember, go back to the basics. Bank. See this, bank is having this dealing with the borrower, right? So borrower will give what? Borrower will give EMI. This borrower will give EMI to the bank, right? EMI. So this SPV will tell this in step number 3. See this, step number 2 is, you know, bank to SPV. Bank to SPV. In step number 3, this SPV will tell the investor, okay, while investing only, that I will give you interest. Interest, I will give you interest. Okay, but there is a condition. This interest I will give you only if the bank gives me the interest. If the bank doesn't give the interest to the SPV, how will SPV give the interest? So this is known as pass-through certificate. There is one more, that's called as pay-through. Pay-through. Okay? What is pay-through? In pay-through, SPV takes the guarantee. In SPV, pay-through, SPV takes the guarantee that let this bank give me the interest or not. I will give you. Getting this point? In pay-through, SPV takes the guarantee of payment of interest. In pass-through, it does not take the guarantee. It passes it on to the bank. So that is known as pass-through certificate. Got it? In process of securitization, which of the following statement regarding recovery of securitized loans is not correct? So this is not. You want not correct now. A recovery of securitized loans is received by the original lender normally. The original lender means bank. Here original lender, whenever we read, it means we are talking of bank. So original lender or bank receiving the recovery passes it to the SPV. The SPV vehicle passes on the recovery to the investor, and none of the above. So which of them is true? Think over it. Which of them is true? Yes? Think, everyone think. Recovery, see here, not correct. Received by the original lender, bank. Original lender bank passes it on to the SPV. SPV vehicle passes it on to the recovery, and none of the above. Not correct. Not correct. Think everyone. Yes, the answer is this is passes it on. Okay, the SPV passes on the recovery to the investor. So will SPV pass on the recovery? No, this will not pass on the recovery. Why? Because SPV will just give the promised interest. Whatever is promised by them, only promised interest will be given by SPV. They won't pass on the whole recovery. The recovery which I get, I will not give it to the investor if I am the SPV. Remaining two are correct, but this C is not correct. Okay, so I will not pass on the recovery to the investor. In case of retail loans, a process similar to securitization is carried and called. What is this? Mortgage-based securitization, collateralized securitization, collateralized debt obligation, and collateralized borrowing and lending obligation. In case of retail loans, what is it carried out? What is it called as? Yes? What is it called as? Retail, remember, retail loans. It is called as CDO, collateralized debt obligation. Collateralized debt obligation means all the loans are grouped together. All these smaller loans are grouped together and then sold off to the investor. Okay, this is called as CDO. There is one more, that is called as CLN. In this, one loan is linked. See, this is CDO. Similarly, you have CLN. You will hear these words, CLN, credit linked notes. Here, one big loan of, let's say, Reliance. One big loan to Reliance is linked to the investor. Okay? So, this is the difference between CDO and CLN. Okay? Now before going, everyone, I would suggest you to join the batches ASAP. Immediately join the batches of Adda 24/7. Why? Because the new batch is starting. Kindly note, new batch is starting. Don't miss this batch. Okay? Which is this new batch? This new batch is starting. See this, let me show you. Go to Adda 24/7. Always I'll suggest you to go through the app. In the app you get 1% extra through the coin systems. So always purchase through the app only, because you will be getting 1% extra. Don't you want 1% extra? Yes, isn't it? So go to Adda 24/7, click on, say this, JAIIB and CIB. Click on this JAIIB and CIB, look at this here. Click on JAIIB May 25, look at it, JAIIB May 25. Here you will see the winners batch. Click on this winners batch. ebooks, test series, mock test, online live classes, recorded videos, expert faculties, everything you are getting. Latest pattern, best in class material, self-paced learning, device compatibility means as per your device, whichever your device might be. Click on this buy now. Put the code Y432. Click on apply. 79% discount plus 1% extra. Never forget this code Y432. 80% discount you are getting. 79 plus 1. So don't miss this. Also you can join the Mahapack. In Mahapack you are getting multiple batches per subject. Look at this. JAIIB Mahapack. Ebooks, videos, mock test. You buy for 6 months, you get it for 12 months. You buy for 12 months, you get it for 24 months. And this 80% discount is already there. Put the code Y432. Never forget this code. Y432. Click on apply. See this 79% discount plus 1, 80%. Okay. So don't miss to join the classes ASAP. Okay. Bye.